Your profit and loss is simply the income and expenses of the company. And that's where a lot of business owners at least look at that. That one tells you, okay, are we actually making money? Like at the bottom, it says net income. So is that a positive number or a negative number?
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 309. My guest today has closed over 850 deals over the past 7 years. He's tried many different strategies and noticed something very strange while he was in the process of building a real estate business that was doing 25 deals a month. What he realized was that the money he was making was not the money that was ending up in his pocket. Instead, that money was going right back out the door with very little cash flow or profit to show for all his efforts. Now, I'm sure many of us have found ourselves in the same situation. David Richter saw this as an opportunity to help businesses see where their money really goes. He's since helped real estate companies completely turn around from going out of business to building real cash reserves by using a method called the Profit First Cash Flow System. David's goal is to completely transform the real estate industry when it comes to how real estate investors view their finances. Today, David is going to help us achieve true financial clarity and freedom and show us how to stop living deal to deal. David, welcome to the show.
Thanks, Brian. Thanks for having me on. Really excited to be here today.
Awesome. Well, thanks for coming. I'd love to learn a little bit about you and your real estate invest. You've done 850 deals. That's a lot for a young guy like yourself. Tell me about that. How did you get into investing in real estate and how did you get 850 deals under your belt already?
I started young, very young, and I started in college. Someone gave me the book, Rich Dad, Poor Dad. So like most investors, that was what started me on a different thinking path. And right away, once I read that, I was in college and I went out and bought a property right away. And through on the MLS, it was a HUD property, so it needed work. So put the work into it and then actually rented it out right away before I eventually moved in there. I moved in there with my wife and my family, and we moved in and we lived there for 2 years. After 2 years, moved somewhere else, got a supertenant in there, did a lease option with him, and he cashed me out 6 months later. I was like, oh, this is nice. So because I also got the tax break because I lived in it, there was no capital gains and whatsoever. So that was a really nice boost. And I said, I got to do more of this. So I actually linked up with a real estate company that was doing probably about 6 or 7 deals a month. And I got to sit on that team for 5 years and did every single seat from acquisitions to selling the properties. So disposing of it, from the marketing, the sales, the property management, project management. I sat in the finance seat too, because we were doing all types of deals. So I got to see lease options, rentals. We were doing seller finance, wholesaling, fixing and flipping, just like you see on HGTV. But it was a lot of that type of stuff that we were doing. And we built that company up to about 25, 30 deals a month. And one of the last seats I sat in was that finance seat, which was very eye-opening. Because I'd already sat in all those other seats, now I got to see how the money worked behind the scenes of like, oh, well, the property comes in and we pay, the acquisitions person, then we sell the property and this is when we realize that gain. But then there's all this other stuff that goes on in between. And then I got to see the whole story. Like, this is super interesting, being able to basically manage the business by those numbers. And I saw our overhead. We had like 25 people at that time too. And I was like, this overhead, we are killing us. So that was an eye-opening experience for me, sitting in that seat basically every day for a year, asking the CPA questions like, okay, how do you book this? Or what does this mean? And just getting the school of hard knocks really about the finances of that small business. So we did a lot of deals there. I was doing some deals on the side as far as like buying some rentals, getting a portfolio, which was a lot of fun. Then we wanted to move. My family and I did across the country, be closer to family. So I sold my portfolio, started working with another investor in Richmond, Virginia. And the first thing I said, I want to look at your books. I said, I want to go in. How are they? I want to see your story. So I dove in right away and saw like, hey, this is not a clear picture. I have no clarity here of like, if you're actually making money, if you're losing money, are you like, are you making stuff on your rentals? What about your flips? Like, are they profitable? Because the people that had been entering it didn't know what they were doing and didn't know, how to book things for real estate. So about 3 months into that, we cleaned everything up. And then he had immense clarity. And one of the first things we did was we saw with his little rental portfolio that he was super under leveraged. He was probably at like 35% loan to value. So value of the house was 100,000. He had a loan for 35,000, and the rest was his money into it. So he said, I'd love to refinance. And he did. And that was amazing because he was able to pull out several $100,000 at the beginning of the coronavirus pandemic too. So like this was all the timing was perfect because he got the money before that happened, was sitting on the cash, and he turned and looked at me and said, hey, you've changed my life. And that was just, it floored me of like, hey, if I can just guide people to getting clarity with their numbers, like a whole new world of possibilities opens up to them. And so that was like, gave me really the itch to get that financial clarity with real estate investors, which led me to the path of Profit First. I had a mentor reach out because I told him, hey, I'm starting this company to help real estate investors gain clarity on their finances. He said, you need to read the book Profit First.
What is the story you get when you look at someone's financial statements, when you look at the books? What kind of story are you looking for?
First, if it has holes, if there's big plot lines that aren't there. So just to see, because like when we first went in there, that was the story. It wasn't a complete picture. If this was a picture book, like half the pictures were missing, so I couldn't even get a clear picture of where he was. But if I go into someone and look at their story and look at their numbers, I can usually tell like this is a heroic story. They've got a healthy profit and loss. They're building assets on their balance sheet, meaning like you're keeping properties. You're able to like, if you're holding rentals, you're taking a depreciation, your taxes are lower. Like I can see that you're actually utilizing real estate to its extent, or I can see you're a struggling business. Then it's like most business owners are really good at doing the business and becoming the CEO, but they don't have the skills of the CFO because it's a completely different set of skills. That they can create the cash and they can create the wealth, but you need a different set of skills to keep the wealth. And so I can see if they're good at creating that top line, but if everything's going out the door, then I know there's a different story there of like, hey, they just need training. They need some coaching on let's make your bottom line healthy. Because if you've got a healthy top line, then it's just a matter of the mindset and some systems to make your bottom line healthy. So those are the types of stories I run into all the time, but more likely than not, it's a very incomplete picture and they have no idea what those numbers are and what their story even is.
David, break it down to an even more simple level for us. Like when you open up the books, and by the way, when we say the books, we're talking the financials, right? Let's dumb this way down for me because I like to start at the bottom and build up. When we look at the books, we're looking at the financials, which would be what?
A financial statement. And there's 3 of those. There's a profit and loss. So that tells you what income you have coming in. So like the sales of properties, rental income, that shows you what income is coming in. And then it also has expenses there. What is going out the door? So like, what are you paying for your people? Like when you sell a property, what were you into that property? Like what did you buy it for? Plus the purchase, plus the rehab and closing costs. And then it has like your subscriptions and all the other just tedious expenses. So your profit and loss is simply the income and expenses of the company. And that's where a lot of business owners at least look at that. That one tells you, okay, are we actually making money? Like at the bottom, it says net income. So is that a positive number or a negative number? I mean, that's the thing that most people look at just first is just to see, do I have a positive net number or do I have a negative? Then from there, we're looking at, okay, if you've got a positive one, what percent is that of your, gross profit? Like, do you have a healthy profit margin? Do you have a healthy little buffer? A margin let's make it real simple. Like on a piece of paper, you've got the margin that protects the edges. Same thing with your profit. You've got to have a little buffer there to make sure that you're actually profitable and have a profitable company. So that's the first one, the profit and loss. That's the first thing we look at. And that's also, it's very telling if we dive in there and there's a bunch of income that's like negative income, or, like it's got a little minus sign. It's like, okay, this is obviously not a set of books that are clean, meaning like it's very clear. We sold it for this much, we were into it for this much and made $30,000 on it, or whatever. You can see a very clear picture from the books, whether or not it's clean or not, whether they've got the right things in the right place, whether the numbers make sense, and it opens up for more questions. But it's simply income, expenses, net profit on the profit and loss. The other thing we look at too is the balance sheet, which is your assets and liabilities. And that's assets is everything you own. A liability is anything you owe. So assets could be the cash you have in the bank, could be the properties that you're holding like rentals, or the flips that you're doing while they're still a work in progress. Then you've also got on the liability side, like credit card debt, or if you are taking private money from a private lender in order to fix up the property, anything that you owe to other people. Then the difference between those two numbers is the equity. That's the equity that you actually have in your business. And that's determined by a couple different numbers. But to make it super simple, on the balance sheet is your assets, what you own, the liabilities, what you owe, and then the equity is what's in between those. So those are the two main ones that people recognize when, probably have heard of those. Then you've got the third one, the cash flow statement. How much money in a certain amount of time did you bring in or take out the door? Because this is the fun thing about real estate, that cash moves through your company all the time. And depending on how it moves, it either ends up on one of those financial statements, the profit and loss on balance sheet. But the cash flow statement, it really says, okay, what was the actual cash from one time period to the next? Did you increase the amount of cash that you've received, whether it was from a sale or from a private lending, a private lender or whatever? It just tells you how your cash is moving inside of the business, whether it's positive or negative. So what I do, what your original question was making it real simple, is I go in there and just look at those statements to see, are they up to date? Like, are all the transactions in there? Do you have, stuff that hasn't been categorized? Because I like to say that your QuickBooks or your, those different statements is like your CRM for your money. So it's like the customer relationship management software that you use to track your leads or whatever. Same thing with QuickBooks and your money. You need a way to categorize. So I'm looking at the categories to say, like, is this giving them a clear picture? Do they really understand? Can they make a decision from the categories that are in here? So some of those things that I'm looking at right away just to see, number one, do they have clean books? And that's, the proper things in the right place and up to date. And is it giving them a clear picture from the categories that they have that they can say, oh, I understand this is a subscription for Zoom. And, it's costing me this much a month, and I'm good with that because I need Zoom in order to function in today's world. It's like those types of things so we can go over together.
So what do you find is usually missing when you go into people's books? Like, what are the mistakes or the things that they're overlooking that should be there?
It deals with usually not having the right person in place helping to input those transactions. That bookkeeper isn't real estate. They don't have the real estate knowledge, because real estate is some of the most complicated to put in. That's why you have to have a competent person putting that in, because from a HUD statement, there's a certain way to book those, and a certain way to get that in there. So that way you actually have at the end a property profit and loss, like an individual properties P&L report that you can pull. So that's where we see a lot is people mess up on entering the HUDs correctly. If they've got seller finance deals, those are some really complicated deals of how you set that up, like for how money comes in and flows through. So that's another one. But not just going over the super complicated side. Usually what I was talking about before is the owner knows the CEO's role, and they know their role usually is really good at sales, marketing, getting the word out and getting sellers to call them. And there's just a neglect on the financial side. So they hire the cheapest bookkeeper they can. They hire the cheapest help on the financial side. They get a CPA to do their taxes, and that's all they get involved with. And then that's where we see over and over again, stuff's not entered correctly, or like they're not getting it up to date and they're not using their numbers. So they don't even know, like if they're a profitable company or not. So it's usually not having those key people in the right place to actually help them get to where they want to be. And then a month will go by, nothing's been updated. And that's very common for us to run into when we first start working with people, is like, nothing's updated here. Nothing's been input in the actual system. Just like a CRM, if you're managing your leads, it would be like, if you're the sales guy and you're like, I got to do the sales, I got to go out there, I've got to, follow up. But if you don't keep the CRM updated, or you don't have an admin to keep the CRM updated, you're going to lose out on all the gold of the follow-up of the people that are in that software. Same thing with this. It's usually a lack of the competent person in that seat keeping the numbers up to date is the biggest thing that we usually see.
And David, what difference does any of that make if you're making money and your bank account?
The difference, I would say, is depending on where you want to go. Where do you want to head? Like as far as a business goes, because if you're looking to sell, pass it on, have a cash cow, like you're not able, the numbers give you the decision-making power to make better decisions, because you could be making, I love this question. You could be making money hand over fist. Your bank account can be growing, but you could be burnt out. You could be living this horrible lifestyle that you don't want to live because you're the one out there, or you've got the team going out there and they're getting burnt out. But without getting the clear picture of your story, the numbers tell your business's story. They really do. They tell you if you are on track to where you want to head or not. And it will give you that intense clarity of, okay, do we need to totally switch what we're doing? We did that with one person where we dove in, they were making money, but then we dove in and they were like, this exit strategy is costing us more time and money, even though it's making us money. So we need to focus on what we're good at, because this percent that we're doing over here of these types of deals, more profitable, less time. And they were able to cut out that a lot more, this other portion here, and start working on this other exit strategy.
Anyone who listens to this show knows that Green Property Management manages my entire West Michigan residential portfolio. They manage single families all the way up to large apartment complexes. Marty and his team are running a new special that I think is absolutely nuts. And I tried to tell him so, but he wouldn't listen to me. They want to offer new clients a $250 per unit project allowance to have their in-house licensed crew tackle any project, big or small, for new clients. I can tell you from personal experience that their unique management style will save you money, eliminate headaches, and increase your net operating income. You add on top of that this limited time offer of $250 per unit for new clients, and it really becomes a no-brainer. So text GREEN250 to 21000 or visit them on the web at livegreenlocal.com and tell Marty I think he's gone off the deep end with this absolutely nuts $250 offer. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Get specific about that example. What were they doing? They thought they were making lots of money, but they had an exit strategy that was actually costing them money. Can you be more specific?
Like the fix and flip side, they were very, it was taking more time. They were making less money than the actual wholesale side that they had. The other side they were doing was just wholesaling properties. They were, they weren't as profitable on this side, and it was more of a headache to the owner and to everyone in the business. But they never had clear numbers to say, because they were always thinking, oh, we're making 40, 50 grand on these flips. It's worth it. Then we dove in there and we're able to show them they were actually making half of their like regular wholesale deals. It was taking them more time. And they were like, we need to focus on what we're good at on the wholesale side and just go after those, and maybe just wholesale some properties, like lipstick on the pig and put it back on the MLS. or something like that. But we need to focus on what we're good at, which they were really good at the wholesale side. And it literally from one year to the next, they went from 6-figure business to 7-figure business just because they were able to focus on what they were really good at and increase the number of deals that they did and increase the profitability because they were able to grab that story the numbers were telling them. And, the one thing he said is, I wish I would have had this a year ago before I went through all this pain, because we just, they had just closed out a year of doing those fix and flips. And they were like, man, that would have just saved us a bunch of headache this year, not having to do those, those types of deals.
You can open the books, you can look at the profit and loss, the balance sheet, the cash flow statement, and that will tell you a story. But before you even get to that point, are there certain signposts, clues that you see in someone's business that indicates what the story is going to be before you even know what it is?
There's a lot of things before we dive into the books too. That's where we can kind of get to the profit first side, the cash flow management piece. Like how are they managing the cash that flows into their business? Because your question was so relevant of like, hey, if I'm making money and I have a big bank account and it's growing, why do I need this? And that's where we see a lot of people who have that mentality. They're usually letting a lot of money pass them by not having some type of system to manage the cash flowing through their business. So that's where we see a lot of people who have like one big bank account and they're like, oh, my bank account's growing, but they have no idea if that's their actual revenue or the money coming in, or if that's private lenders' funds, or are they commingling personal funds too? There's just, I've seen everything under the sun now, and they don't have any way to clearly see from the entrepreneurs, the owner's point of view, whether or not, besides them feeling good about that increasing bank account, but if they don't really know where it's flowing, then that's where we see a lot of people up front like, okay, we can tell there's no system, then we're leaving money on the table somewhere. So we've got to make sure we've got to get some type of system to help them manage the cash from the entrepreneur's point of view, because like what we just talked about right there, no entrepreneur wants to go through that. That's why I created the company's Simple CFO, our fractional CFO service, because we basically take those numbers and then have the owners meetings with them, but like more on a silver platter of like, here's what the numbers are. Here's how we can make decisions. I shouldn't say no owners, but like 5%. So 95% though, don't want to even ever open up their books, don't want to look at that stuff. And I'm like, I totally get that. You're the deal maker. You're the deal finder. Let's get you a system though that's going to make you feel comfortable, because you're probably looking at your bank account balances every single day. And so like, let's manage it around that. So you at least have a system that makes you feel comfortable, where you know what your money is and that your profit is growing, that you can pay yourself, that you can get into that habit. And that's one of the first things we see outside of diving into the books is, do they have a system for this or not already? Because if not, they're probably making a lot of gut decisions, and they're probably not maximizing what they could or mitigating the losses as much as they could without some type of system like that.
Talk about the system. What do you look for at a minimum to have a system in place to help accommodate these things? And what's a rock solid, rock star system that you would like to see someone have?
I always tell people the profit first for real estate investing system is for if you've done one deal or 1,000 deals. Like, start where you are, because this is all about not just an accounting hack, not just something like that. The whole purpose of the system is to get you in the habit of profitability, getting you in the habit of not being that chicken running around like with his head cut off. So what it does, the practical steps behind it, I'll tell you in a second. But the whole mindset is in the accounting world is sales minus expenses equals profit. So you make a sale, you sell that property, you get rental income, you pay everyone else and your mother. Then what's left over is hopefully yours to spend, like at the end of the year, or, at the end of the month, you're hoping you have a couple dollars to rub together. That's how a lot of entrepreneurs go into it. And I've had conversations with people making millions of dollars in the real estate industry who still at the beginning, feel that way of like, okay, I'll just take the profit when I think I can. And there's no system around it. But the formula, the profit first formula is sales minus profit equals expenses, meaning I make a sale, I allocate my profit first, which I'll talk about what that is, allocate the profit first, take my profit first, and then what's left over is the expenses I have to run the business. So it just makes a slight shift in that mentality of I need to be a profitable business owner in order to make sure I not only am profitable today when I have one deal, but I keep the same system, but just grow it as I gain more properties or sell more deals and build in that profitability margin, like I was talking about earlier, that margin of safety, building in that cushion, that buffer of profit as you grow, because you are going to want that no matter if you grow to 1,000 deals, 1,000,000 deals, you become $1 billion company. This is where you want to start off on the right track, because you want to get that mentality of making sure you, the company, are healthy and that you're not just taking expenses on just because you think there might be a chance of seeing a pot of gold on the other side, but you're doing it intentionally. So you're building habits in there to become profitable. So how do you do that? Which is usually the next question, is bank balance accounting, bank balance money management, where most entrepreneurs, like we were talking about, they go into this system and they're like, you know what? I don't want to look at my books. I just want this spoon fed to me, but they still look at their bank accounts every single day. Like I looked at my bank account today. Like most entrepreneurs are just looking at their bank accounts, not their actual QuickBooks system or the accounting system that's reserved for the CPAs, CFOs, and bookkeepers. So they're looking at their bank balances. So what do? We say, hey, you need to set up some fundamental bank accounts right away. Set up an income account. All income gets dumped there. It's just a holding bucket. Then first major account should be the profit account. Set up an account for profitability. This is now a separate account from your operational expense account that is just for the cash profits from your company. Then another one, set up an owner's compensation account. If you are working in the business, you need to set up an account so you are paid from that business. So even if you still have a W-2 job, or if it's your full-time, make sure you have an owner's compensation to get in that habit. Then we also say then owner's income tax account. So if you're not, I should especially say if you don't have rentals or aren't holding properties, you definitely need this account to make sure that you have the proper taxes at the end of the year to be able to pay whatever income taxes you have from your company. And so that's another account. And if I call those three, the profit, owner's comp, and owner's tax account, the golden trio. Because I'm a big movie nerd. I love movies. I love the big epic sagas like Star Wars, Harry Potter. They've got like the three main heroes that are always helping push the story forward for good. Well, no one has that in the business. We usually have an operational expense account. That's where all the income comes in. That's where all the expenses go out. And it's like you never know and have it separated out like, okay, no, I need to actually take profit. I need to actually pay myself. I need to know that we have the taxes at the end of the year too. And then that last account is an operational expense account. So number 5 account there. Those are the fundamental accounts. And then for real estate investors, I like to say you should open up an OPM account, other people's money account. Because if you're taking in private money, that should not go into your operational expense account, shouldn't go in your profit, shouldn't go in income, shouldn't go in your compensation. That's for usually specific projects that you're working on, and you should have that separated out. Biggest feedback I get from that is 6 accounts. Are you nuts? And what I tell people is this is about getting you in the habit of profit. If you can just open one account from this call, open one account, call it profit, and transfer 1% into that and start transferring 1% of your income. Do you see you could do this if you have 1 property or 1,000 properties? Transfer 1% into there and start getting in the habit of doing that on every deal. And then if you're like, okay, I get this, now I'm building actual cash profits in an account, I'm still able to run my business, then maybe start adding the other accounts. But a lot of people we work with that we've seen, because you said what's a robust system or what's something that you've seen work well for people is I've got a great example. This guy that we work with, he's got rentals and he's got a fix and flip company. He opened the main accounts for both entities. So 5 accounts over here, 5 accounts over there. And he was like, I never thought I'd have 10 accounts. And at first he was a little overwhelmed because he's like, okay, all these accounts, we started working with him and saying, okay, you got rental money in, or you got this fix and flip money in. We need to now take that money from income account and transfer it by percentages to these other accounts, to profit, to owner's comp, the owner's tax, to the operational expenses, making sure your business is healthy. And he texted me a couple months ago. He's like, man, I never thought I'd have 10 accounts, but he's like, I am never going back, because it has provided him clarity on what he has for profits, what he has to spend on his business, what he has to pay himself inside of his business. And it's so great right now, literally right now, while we're recording this podcast, he's on a vacation, a 2-week vacation that he took from his profit account as a distribution, totally guilt-free, because that was the profits from his business that he could use for whatever he wanted. So that's a successful story that we have from someone who's running the system. Then the next big question is, okay, what are those percentages?
I want to go back to the whole idea of profit first and rewind to early on in the conversation. You were about to tell me how you came across this concept. Talk about that a little bit. Talk about your mentor brought you this concept and how it changed your perspective there.
I was telling him about the business I wanted to start, kind of a fractional CFO service that helped real estate investors with clarity around the finances. And he said, you should read the book Profit First, because it's like a system. It's a system for entrepreneurs, to manage their money clearly. So then I did. I downloaded the book that evening on Audible, sat there on my couch, took 10 pages of notes right there and said, light bulb moment, this is going to help so many people. And, I implemented it right then into my business. I went out there, set up those accounts, the ones we were just talking about. Then I was like, we need to build this framework with real estate investors, because I think real estate investing can be so up and down, so cyclical. So, the property's going to close next week. Oh, guess what? Their loan just fell through or whatever. You've got a whole bunch of things. So that's where I wanted to help people manage the cash side of their business. So that's where I heard about it from my mentor, took the notes, incorporated it. And what we do now is very much inspired by Profit First and that book with what we help people with, because I saw immediately how it could help from the owner's point of view and not from the CPA, bookkeeper, accountant, from that aspect. It was more like, this is a system for the owner to have a very clear understanding of where their cash is.
If I were to encapsulate it, just taking everything you said and kind of putting my own understanding on it, it sounds like what you're basically doing is creating separate accounts that segregate the different aspects of the profit and the expenses that you might have in your business. Is that pretty much what it is?
Exactly. Those 3 golden trio accounts that I called them are all for the owner's benefit. Their profit, owner's comp, and the owner's tax that you're saving for when it's tax time. Those are basically profit accounts. Those are from like the profits of the business that go in there. The one specifically profit is like the actual profit from the company. Owner's comp is to compensate the owner. The tax is to pay for the taxes of the owner and their income taxes. So yes, it's separating out very clearly what's profit in the company and what's the expenses to run the business. And are you running lean enough or not?
Talk about some of the success you've seen using that method. How are people able to get their arms around their profit and increase that profit using the system?
The first thing is just being able to separate it out to see where they are currently. Because one of the first things we do before they even set up the accounts is run a little assessment for them and say, okay, this is, if you were saving money, this is what your profit would be or whatnot. And getting them just a baseline percentage for them of like where they are right now. Sometimes the scary thing is with a lot of people, that number's negative. And that's the sad part. But what we've been able to do, even with those people, is we set up those accounts. We hold them accountable when they get income in to start actually allocating money into those accounts. They start seeing the balances grow in like the profit or the tax. And they see like, okay, this is fun because I don't have to touch that money in order to have the success in my business and really run the business, the day-to-day expenses. And then every single quarter, we're sitting down with those clients and saying, okay, you did 2% to profit this quarter. Can we up it to 3%? Can the business now afford to do 3% like to profit? And are we able to cut any expenses down and live on leaner so you could actually have more reward from your business? And so it's increasing those. That's where this guy who's on vacation right now has gotten to the point where I think he's about 10% profitable, where just for that account from both of his entities that he's funding. So that way he was able to gradually work up to there. and then take the money out of the business and actually go out and use that money for what he wants to. Over and over again, though, the biggest thing that we hear from the people we're working with is the clarity that they see around this, that I was at 1% or a negative percent in profit. Now I'm up to 5, 6, 7, 10, 20%, wherever the clients are at that point, and saying, I can see the measurable change just from focusing, from doing the same activities, but in a different format. And I'm saying like, hey, I'm going to take the profit first, put it in this account, then live off of what's left over. We've seen them be able to increase the percentages that they're putting into those accounts over time. And I've got story after story with people that we've worked with where they see that consistently. Then they actually feel like a business owner. That's one of the biggest feedbacks we get to is like, I never had a handle on my finances. Now I feel like a real business owner. I get to make decisions from my actual data and the cash that we have, rather than just like, I hope this works. So it just gives them a lot of clarity to be able to make those types of decisions and make them a lot more effectively too. So just a couple of the things that we see with our people we work with.
David, how often do you get into someone's books and numbers and story and they realize, you know what, I'm completely wasting my time and it's actually costing me more than what I'm making? How often does that happen?
There have, up to date so far, there have been some people where we've dove in and it is really bleak. Like they're very much in the red or negative, but we've seen that no one has thrown in the towel yet on real estate investing. It's looked pretty bleak in the past of like if they've gone through a rough patch or a rough period, but most of them, well, no, like all of them have said, we want to turn this around. We need to turn this around, and we don't want to give up on real estate investing. And we've seen people go from literally, from in the red one year to the tune of negative $70,000 to, in the black net profit, $200,000 the next year, just because they focused on this one area and made some tweaks in order to get there. So I feel like anyone that we've worked with consistently for a long time, that even if it's very bleak at the beginning, some people had spent over $200,000 losses in the previous years, 300,000, and they're just like, is this going to work? And now they're on the path. They're much, they have actual profit now. They've got a leaner team. They've got the actual decisions to be able to get to where they want to be. So so far with the people we've worked with, no one has thrown in the towel to say this is not worth it. Usually it sparks different conversations of what's a different revenue stream, or is there something I am doing that's working that I should focus on more, or do I need to, pivot to, this other exit strategy?
Give us a concrete, specific example of that, what someone was doing and how you help them look at it a different way.
There's a guy that was doing wholesaling, and right now he's switching to Airbnbs because that's his passion. He wasn't making money in wholesaling, but he likes the Airbnbs. He's got Airbnbs so far, and they've been profitable for him. And he's got management teams, in place. And so he's switching from mainly wholesaling to mainly Airbnbs because those are his cash cows. They really are doing a lot better for him, even than the marketing that he was doing, because he was spending like $15,000 a month on marketing for wholesale deals and was barely getting one deal a month, so he saw, with an analysis, okay, wholesaling is not working over here. And over here, we've got, the Airbnb. So he switched completely from one to the other. Another thing that we've seen too, concrete example of this, which is probably the toughest for owners to talk about, and which is why I'm not saying names of anyone, is we dove in with some people, and the people that they're paying on their team right now are not the people that should still be on the team. They're not either a culture fit, or they're not producing what needs to be produced in order to get the business to where they are. So they've leaned down their team, the systems or whatnot, in order to get to where the business really needs to be, because so many people want to scale. They go to these masterminds, they go to these events, and everywhere it's preach, scale up, hire people, do this. But all they're doing is putting fuel into a plane that's going down. So we've seen that with this one guy. We were able to take and say, your overhead is killing you, but you need to tell us and show us, like, if they're doing a profitable job, like, then they need to stay. But if not, and he went through and it was a big shakeup. There was a lot of things there behind the scenes, that the numbers didn't always tell us what was really going on, but actually gave us a little sneak peek of, the trouble that might be brewing behind the scenes. But we had to have frank conversations. So some people are switching exit strategies like that, from whether it be like I talked about, fix and flip to wholesale to Airbnb, or they're leaning down their teams because they're actually seeing where they actually need to be profitable.
You have a book that you wrote that's coming out very, very soon on this very topic. Tell us a little bit about your book, why you wrote it, and feel free to plug it too, where people can find it and what they'll get out of it.
It's called Profit First for Real Estate Investing. So Mike Michalowicz wrote Profit First, which is a great book. That's the one I read that got me fired up to help people. And that one, though, covers business in general. The real estate investing book covers real estate investing specifically. I've seen lots of different deal types. I've been a part of a lot of different deals. I've had my deals, I've done those types of things. I know I've been a real estate investor. I've claimed that title for 10 years now because I started, like I said, in college with that first deal. So it's like I've had that itch. And now it's like I wanted to get the message out that you don't have to live deal to deal, that you don't have to, that you can be a profitable company. You don't have to do more deals to be more profitable. You have to take your profit first. You have to be able to get that in place and actually have a system and make profit a habit. So the Profit First for Real Estate Investing version deals with specific real estate examples, talks about some of the people I talked about here. One of the people actually hung up on me. One of the first conversations we had, he's still working with us, but he's was so discouraged about where his numbers were, and I tell that story in the book, and he's one of the ones that switched exit strategies and had a lot of clarity. So that book is just full of those types of things and the practical steps. I told him about it here because I don't want to hold anything back. I want you right now to go out there, open one account, get the profitability habit in place, transfer 1%. It is the difference between you being a profitable company and not right now and in the future too. So it's full of those types of stories. It's coming out December 7th, 2021. So if you're listening to this before or after that, we'll have a place for you to be able to it'll be on Amazon. That's where you can either pre-order it or you can order it officially if it's already out and you're listening to this past December 7th. But I really appreciate you, Brian, for having me on here to being able to say this, because this is my passion project. I poured a ton of hours into the book, into really helping people just know they don't have to live in the rat race as a real estate investor. So I want to make sure they're able to get out of that rat race and manage the finances from a very simple way from the owner's perspective. And it deals specifically with real estate investing examples.
Feel free to tell us a little bit about your CFO fractional business and how people can find out more about you or get a hold of you.
I love the real estate investing community. I love the people that I've got to rub shoulders with. And now with this company, this fractional CFO service, I've seen people, they have gone from, like we've talked about, from very much in the red, almost to the point of giving up, like Brian talked about, like throwing in the towel, to now switching to the other side of they are able to take the vacations with their family like is happening right now. And so our fractional CFO service is built on the foundation of 3 principles: financial clarity, making sure you have the right numbers. It's also the cash flow management system, the Profit First for Real Estate Investing system, and getting that built in there. And then wealth creation and accumulation. What are you doing for your long-term planning? What do you really want to do with your business? So that's what we do and help people with. And we've got a lot of great fractional CFOs on our team. So what we do, and a fractional CFO, because a lot of people say, what the heck is that? And when do I need a fractional CFO? Fractional CFO is a part-time CFO, meaning if you're a small business and you're not going to hire $150,000, $200,000 CFO to sit on your team. Fractional CFO, our clients are usually between $500,000. They're making that to up to $10 million. So that's usually the target range there, where you're maybe too small for a full-time CFO, but too large not to have someone actively helping you know where your money's going. So that's the service that I offer. SimpleCFOsolutions.com is the website for that fractional CFO service. And it is my passion project, like I said, because I just had a lot of good people, 2008 and 2009, that I knew personally that lost a lot of money, lost a lot of houses, And I was like, there's got to be a system that helps them during the good times, during the tough times, to have a handle on their finances so they don't ever have to get in this situation again. So it's a little bit about what we do and why Profit First for real estate investing and the Fractional CFO service.
Thanks so much for coming on the show and talking about Profit First for real estate investors. I look forward to reading the book when it comes out. And thank you for kind of taking us through the thought process of really getting that 360-degree view of your profit, your losses, understanding what your cash flow, profit and loss statement, and balance sheet are for. And hopefully, some of our listeners out there will be able to take control of their profits and improve them even better after listening to this conversation. Thanks so much for having it with us.
Oh, thank you for letting me have it. And just remember, open one account, transfer 1%, just get in the habit. That'll change your life.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, now offering a $250 per unit project allowance to new clients in West Michigan. Find out more at livegreenlocal.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.